The US stock market, now more than ever, is not based on performance, metrics, revenue, or even math at all. It is shifting to a new paradigm that is cult-like in behavior. That is largely driven by the fact that apps such as Robinhood and Moomoo have brought a new type of investor to the table in droves, and that is the retail investor. Gone are the days of 20 to 30 years ago when you had to contact a qualified broker to make a trade. Now anyone can jump on these apps, which have made gamification of the markets their entire profit model, and trade within seconds. And such things as fractional stocks means that literally any amount is in play. And with this gamification comes the same type of behavior you would see in games. Herd-like behavior, wild gambling, and at times just utter nonsense. Not to say that the market was ever purely performance-based and such. Human emotion is involved in everything, and before the retail investor came to dominate the market, we were largely contending with the greed and corruption of a handful of elitists. But things right now do seem at times to be utterly absurd. I mean, just look at GameStop and what happened there, where the little guy took on the big guy and kicked his butt. A story from the dawn of time that we have all come to love. Yet what was missed in this whole debacle was a thing called market fundamentals. Now I want to be crystal clear that I do not think that this paradigm shift is a bad thing. Overall, I do believe that equal opportunity afforded to the larger market in general will be a good thing. However, the pendulum has seemingly swung too far just one way. And to illustrate that swing, today we're going to take a look at what I consider to be the poster child of this clown show, and Cathie Wood's and Elon Musk. Wood's now infamous letter to Musk in 2017 was thought at the time to be a tipping point towards lunacy, but boy, were we all wrong. Things have gotten much, much worse. Now, real quick here, I do want to advise that I am not a financial advisor, and nothing I say on this channel is to be considered financial advice. Also, to all of you who have subscribed and been here before, welcome again. And to those of you who are new and haven't subscribed, please go ahead and hit that like and subscribe button down below. It really helps us out. And new to the channel is memberships. If you like what you see and you want to support this for the price of a cup of coffee, you can help keep this content coming. Please do so below. Now let's go ahead and get to our letter. But before we do, I thought we would just take a quick peek at the dynamic duo, Cathie and Elon. Why hasn't he impregnated her yet? What a perfect choice. Anyways, moving on. The infamous tweet from 2017. Elon Musk, am considered taking Tesla private at 420. How funny, the pot smoker reference there. Funding secured. Cathie Wood, who was leading ARK Investment at the time, wrote this. Dear Elon and Tesla's board of directors, as chief investment officer of ARK, a Tesla shareholder, I am writing to express some of our views about its outlook and investment potential. We believe that Tesla should remain a public company. According to ARK Invest research, Tesla should be valued somewhere between $700 and $4,000 per share in 5 years. Taking Tesla private today at $420 per share would undervalue it greatly, depriving many investors of the opportunity to participate in its success. In our view, given the right investment time horizon, Tesla is a deep value stock today. Now, I want to be clear, the $420 they're talking about is not based on today's prices. The stock has split many times since then. We are actually above this $4,000 per share. However, I will break this down more. Let's just continue with the letter. Our $4,000 price target assumes that Tesla evolves from a hardware manufacturer with 19% gross margins to a company generating most of its profits from mobility as a service, a business that we believe will enjoy 80% gross margins. In the $4,000 scenario, our assumptions are conservative. We incorporate profits only from cars and certain autonomous taxi networks, not from trucks, drones, utility scale energy, or the other mass opportunity in China. Further, we incorporate the roughly $20 billion dilution that might be necessary to penetrate and scale the ladder for markets. Clearly, most asset managers in the public markets do not agree with us, which is why I'm writing to you now. Now, before we go, I'm not going to read the rest of this because a lot of just regular talk. We'll look at what they base this on, their bull and bear case. But before we do that, I came to perplexity and I asked it, what was Tesla's market cap and stock price on August 22nd, 2028? Now it's giving me the adjusted for split price of $21.44. So we can see that at a price of $2.99 that we are roughly, if you take this $21.44, you times it by 10, that's $2.10 minus this is roughly $90 divided by 21 is about 4. So we are 14x. You can say 14.5x where the stock was on the day that she wrote that letter. Okay? Now you might say, well, how do we know without the stock price? Well, we can go down here and we say, what price did it close at on that day, not adjusting for splits? It closed at $366.98 per share on that day. Okay, so she was predicting, in her bear case, a 2x valuation double from 70. The market cap on that day was 73 billion, from 73 billion to 146 billion in 5 years. Or she was predicting the bull case, okay, of $4,000 per share, which at 366, that's times 10. And then you have roughly one more of these left, 11x, okay? So just so you understand, that's what she was predicting 5 years from her letter in 2017. So that would be around August of 2022. And we can see that Tesla was above that, 275.61. So based on this, that would be like 13x. So it exceeded her projections, okay? Now it's been mostly flat since then. I mean, it's had obviously up and downs, but you can see that essentially it's been a flat line since 2021. But let's come in here now and see if we lived up. And remember, at the time this was released, people thought this was a crazy. She even wrote here, she knew she was an outlier. And she's like, oh, we're just seeing something other people don't. People thought this was nuts, okay? But she gave her reasons. She gave her reasons. So ARK's top-down and bottom-up assumptions. Oh my gosh, this is just nuts. Our bottom-up model bear case assumes that Tesla fails to create a fully autonomous car, okay, by 2022, which is actually accurate. It still hasn't created a fully autonomous car. Our top-down model risk-adjust market forecast assumes that autonomous driving commercializes in 2022. It hasn't. 3 years later than our base assumption. Their base assumption is 2019. For the year 2018, we project that Tesla's market share of EVs globally will be 17%. I do think that actually that they were higher than that in 2018, okay? Our assumption is that if the need arises, Tesla will tap the equity markets to shore up its balance sheet or to invest in growth internationally. They didn't have to. The clown show started happening. People threw their money at them in cult-like behavior for no reason. We assume that all cash flow from the EV business will be reinvested into the company. Though autonomous mobility as a service could cost as little as 35 cents per mile, ARK believes the service will not be priced at that level until the market saturates. If Tesla were to launch the Tesla network in the next 1 to 2 years, and she's only saying this because Elon had promised it every single year for like 4 years up until now, or 3 years, sorry, 2017. Launch the Tesla network in the next 1 to 2 years, it could charge premium rates while autonomous taxi production is supply constrained. Please see additional assumptions and models in ARK. We won't need to. Here's the bottom-up valuation, right? This is, so we have bear and we have bull, okay? And this is TTM Q2 2018. We're not going to worry about that. The bear case for 2023 Q2. Oh, I thought she said 5 years. She did say 5 years. That would be 2022. Well, it doesn't matter. Let's look at 2023. The bear case, that's actually 5.5 years from her time. The bear case is 1.6 million cars sold in a quarter. Sorry, I didn't mean to yell. In a quarter. In a quarter. 1.6 million cars sold. They might not sell 1.6 million cars this year. She's saying in a quarter, they're going to sell 1.6 million cars at 30% margins. How many cars did Tesla sell in Q1 this year, and what was their margin? Just to give you perspective, I want to give you exact numbers here. Okay, so this is the bear case, okay? The bear case, which we thought was crazy back then. And remember, her bear case is 2x. 2x. Q1, 336,000, okay? That is 1/4, not even 1/4 of what she estimated. Yeah, it's not 1/5 yet, but it's just below 1/4. So of her bear case of $700 a share, okay, that she listed above, remember, I'm going to go up to her letter, between $700 and $4,000 per share in 5 years, okay? And here's what she's saying her bear case is. 1.6 million vehicles a quarter. Tesla's not even at a quarter of that, okay? And their margins was 16.3% lower than what they were, or sorry, slightly higher than what they were here, 14%, when they were strapped for cash and growing. And she's predicting 30% on the electric EV vehicle business. But you might say her bull case is the same. It absolutely is. Because her bull case isn't based on the car service. It's based on mobility as a service, 100%. She saw Tesla scaling up to this inevitably. She thought this was inevitable. She's saying, hey, the car business is unstoppable. Bear or bull case is getting to this. The bull case is purely derived from this over here. Mobility as a service. Okay? So do you understand this? She put her 11x for 2023 Q2 based on her 11xing of the price in 5 years for 2023, right? Is based on the fact, bull case, is based on the fact that they were going to make 4 million robo-taxis. 4 million robo-taxis on the road. 4 million in Q2 2023. And each taxi would be driving 116,000 miles. 116,000 miles each taxi. Well, how many miles is that? It's 4 million, so that's a lot of zeros we got to add. So like a billion would be 1,000, right? Yes, a billion is 1,000 times that. So 10,000 would be 40 billion. She's saying they're going to drive 450 billion miles. How many miles do all cars in the world drive per year? She's saying they're going to drive 450 billion miles. 16 trillion miles. Okay. So 450 billion into 16 trillion. She's saying that is what? That is 10% would be 1.6 trillion. So about 2.5%. She's saying that autonomous taxis, we're going to drive 2.5% of all miles in the world, period. That's an astonishing figure, okay? Percent of Teslas on the platform, 70%. Price per mile, $1. Gross revenue, jeez. So this is in millions. This is, okay. So, I mean, this is absolutely just bonkers, okay? What, I mean, is this everything in millions unless otherwise noted? So what is this in millions? 1,000 again. Revenue, 1,000. I mean, I have to do this in my head because it's so weird. 1,000 is a billion. This would be 10. What? That can't be. She can't be saying 185 billion. Is she saying 185 billion dollars? No. Yes, she is. Because look at this. Market cap, 909. They're going to make $185 billion in a quarter? Sorry, I didn't even look at that. I just looked at the bull case here when I saw this, and I started laughing. I was like, I got to share this. And I came to this, and I started laughing. I was like, I got to share this. I didn't look at this. $185 billion a quarter. A quarter. Wow. I mean, that's like what Google, what was Alphabet's revenue? I think they're at 90 billion a quarter. $90 billion. It'd be twice that what Alphabet is. Gross margin 58%. Oh my God. Wow, Google's at like 30%. Oh my gosh. So they'd be making like, if they were, they'd be at like $50 billion in NOI a quarter. If they were at that, it would be worth more than this. But yeah, I don't know what else to say. What do we say? Okay. So this is an absurd letter, right? What we thought was absurd. But what's more absurd is the fact that Tesla is worth more than this right now. And it has not generated $1. Not one single dollar has been generated from autonomous mobility as a service. And it is selling not even 1/4 of the amount of these cars. Okay? I don't know where else to go. This is the cult-like behavior. You just promise things. People have short memories. They forget, and you keep promising things. And then there's real companies out there doing things like Google, who everyone's predicting the death of, even though they keep growing. Search is done. Search grew 11%. Do I believe search is going to be changed over the next decade to 15 years? Absolutely. Is it possible someone could upend Google? Absolutely. But I'd like to see it happen first, because they're investing. They are the front runner. Maybe you say they're not the front runner because more people are using the OpenAI app. But more people are using Google Gemini in search overviews, 1.5 billion a month. Okay. So plus their other revenue is growing like crazy. Plus, if anybody is going to get a big chunk of this mobility as a service, it's going to be Waymo, who's the leader. So this is the absurdity of the market. And this is where I believe the pendulum needs to swing back the other way. Okay? Retail investors, we're talking about money, which is numbers. We have to use a little math. It cannot just be cult behavior. It can't be Apple makes me feel good. They say I'm creative, so I'm going to never sell. Sam Altman reminds me of Elon, and he promises me things even though they have no chance at making money, except for the fact that people just keep throwing money at them for investment, but they have no chance at making money because Alphabet and Meta and DeepSeek are commoditizing the agent space. And Sam Altman's $20,000 a month agent isn't going to work except for fanboys. And I don't think there's that many fanboys out there, but who knows? Maybe there are. Maybe I'm wrong. Maybe where I'm wrong is fanboyism is what's going to take over the world. Okay? It's what's propelled Tesla to this. Tesla does not have her bear market predictions. Her bear market predictions were $0 in mobility as a service revenue. $0. Okay? That was her bear market. 600,000 vehicles per quarter. That's 6.4 million vehicles a year. They might not reach 1.6 million vehicles this year. Hopefully you enjoyed. If you didn't, please leave a comment down below. Thank you.